Sellers, things are not looking good. I know we're not too far into the year yet, so it is hard to say, but there are some trends here in Phoenix that are just not as favorable for sellers. Plus, we're going to talk about some surprising concessions that millennials are willing to make in order to get into a house. So let's get into everything. Thank you for joining me on this Wednesday. Percentage of closings with seller paid concessions. So this is the first thing I want to talk about. This is at 51%. What this means is a seller is providing some amount of money to the buyer to be used towards their closing costs at close of escrow. That's what a seller concession is. So oftentimes buyers are using those funds to pay down or buy down their interest rate to make their payment a little more affordable, or they can just use them towards their closing costs. But 51% of sales in December had some form of seller concessions, and the median was $10,000. So what does this mean if you're a seller? Just know that when you receive an offer, it is very likely that a buyer is going to be requesting some form of concession from you, whether that be a percentage of the sales price or just a flat dollar amount. And if you're a buyer, know that this happened 51% of sales in December. So it's certainly something you can add into your offer. Of course, everything is negotiable, but this is lagging information too, I will say, right? So this is from December. We have to wait until those closings occur to actually get the sales price and any concessions. So all of this is from December. However, I don't think much has changed too much in the market since December. I would imagine January concessions will probably be similar. That said, this is also affecting when you look at like median sales price, know that, okay, that house closed at $450, but if they had $10,000 in concessions, the seller actually had a net of $10,000 less than $450. So just, things to keep in mind as you're looking at the data out there, and just know, as you go forward, whether you're a seller or a buyer, that this is what's happening. If you are curious of what the seller concession percentage was in your city, I can pull that information for you. So just check the description below to request that info. Now, let's also talk about where we're at with active listings, because this is something we were tracking very closely towards the end of last year. And as we've started this year, we've seen a lot of new listings hit the market. So there's been an increase of 2,324 in the active listing count. This is an 11.9% rise, which is much higher than the 8.1% increase we saw at this time last year. This year, we started with 19,480 active or 460 active listings. And last year, we started with 14,593. So not only are we seeing more listings come to market within the same time frame as compared to last year, but we also started with a higher amount. So overall, we're seeing our active listings on the market increase faster, and we have more than last year at this time. You can see this by looking at the chart pretty easily here. The pink is 2025. We're almost double the pace of last year. So starting around 20,000, we're almost to 22,000. And last year at this time, we started at about 15,000. And then within the first 2-3 weeks of the year, we were at 15,900. So a very big difference in how we've started this year. So sellers, when I was saying things aren't looking so great for you, this is one of those trends that we want to watch, because the more listings come to market, the more competition you have, and then the more competitive you have to be on price in order to get your home sold. So these are a couple of the trends that are happening here so far. I've got some more to share, but I wanted to jump over to talking about this latest article from Redfin about pending home sales. So pending home sales fell the most since 2022 in December as mortgage rates jumped. So if we remember, we had really favorable rates in September. We saw some movement in rates that really brought in a lot of buyer activity, brought back some buyer demand before we got into the fall. And then rates started to go up all over again, and all of that activity began to taper off. Now, the pending home sales that we saw in December, and this is national, fell the most since 2022. They dropped 4.5% from November. And they also said that roughly 40,000 home purchases were called off in December, which is equal to 16% of the homes that went under contract, the highest December percentage on record. And I find that really interesting. I wish I could get this data for Phoenix, but unfortunately, it's not something that the MLS tracks. But this is obviously from Redfin, so nationally, that they saw 16% of homes that went under contract actually were canceled in December. Now, they do say that these homes that went under contract could have gone under contract in November or even October, but they were actually canceled in December. Now, they say existing home sales, which is a lagging indicator of the deals that were negotiated in prior months, those rose to the highest level in nearly 2 years. So that is showing that time frame of when we saw more buyer activity in September, things actually went under contract, and then those sales closed. So that kind of bumped up those existing home sales. But they are saying home buyer demand dipped at the end of the year because mortgage rates jumped. In fact, we haven't seen too much change in mortgage rates since the end of last year. They haven't really been going in a favorable direction for buyers since the start of this year. So let's take a look at where we're at. This week, we're around 7.08%. So it has gone down from this peak of 7.26, which is great news, but we're still just about 7, a little bit over. And last week, I mentioned that we were waiting on the inflation data to really give a good indication of what's going to happen with rates, because as these announcements come out, the markets react to them, and that's what changes mortgage rates. And last week, inflation actually came in lower than expected, which was good news for rates. This week is a little bit of a shorter week. We'll see what happens with the inauguration earlier this week, maybe some new policies that are being discussed. All of that could affect the market. So keep in touch with your lender. And of course, if you are trying to find a way to avoid these rates, consider the loan assumption process. It could work well for you. We have a free guide below that you can download that gives you all the details about assuming a mortgage and how that process works. It can be a huge advantage for a buyer and can even work for investors. Now let's talk about these millennials. Before I get there, if any of this is helpful for you, consider subscribing to be part of our community going forward. Millennials, they are the largest generation right now that is buying homes, and they're desperate for affordable homes. This survey that just came out said 21% of millennials believe their generation can afford a home, only 21%. A substantial decline from the 52% who said the same in early 2024. 96% of respondents have concerns about purchasing a home, and 44% say they're worried about finding an affordable home. They say that 57% of millennials said their desire to be a homeowner means they'd be willing to purchase a home that smelled like cigarette smoke. 41% would purchase a home with asbestos in it. 41% also said they'd be willing to buy a house with pests in it, such as mice, cockroaches, or spiders. You can count me out on the cockroaches. That is a no-go for me. 40% said they would buy a house with a leaky roof, and 35% said they'd be willing to accept foundation issues. Interesting stuff. Now, I did say trends for sellers are not looking good, but this is one thing for sellers. Hey, you might find a millennial willing to make some pretty big concessions according to this survey. So let's talk about what's going on here in the Phoenix area. I wanted to share a couple other trends that the Cromford report is pointing out. So the contract ratio, this is something that we look at every single week. And the Cromford report is saying this is another one of those trends not moving in favor for sellers. So it is stuck below 30. Last year, it was 41 and on a strong upward trend. So if we take a look at the contract ratio, you can see here we're at 28.7. If we go all the way back to January of 2024 and we get to that third week, you see we were at 42.8 and you saw this rising trend taking place. There's not a whole lot going on here right now. We'll see if that changes. Now, as a reminder, the contract ratio is a more live look at what's going on in the market, because it is looking at the number of active listings in relationship to the number of homes that are already under contract. Okay, so the more actives that we have and the fewer of those that are under contract, that contract ratio is going to be lower, meaning that the market is a little bit weaker. There's more homes for sale than there is buyer demand. And the opposite is true when we have a hotter market. We'll have a number of homes on the market for sale, and that number that are actually under contract is much higher. So there's not a lot that's actually available. There's just a lot that are under contract. So that is what this is looking for, and anything under 30 is considered a cold market. We can also look at this in a zip code form on this zip code map, which we take a look at every single week, and I love to see what's trending here. Looks pretty similar to last week, except we've added we lost one zip code that was hot. We still have Tempe that's more in this warmer area in Tolleson, and it looks like a tiny section here in South Phoenix has gotten to that like warmer hot range. Still a lot of green and blue, meaning that it's balanced or warm or cold. Now the overall CMI today stands at 91.3. We have our demand at 76.4, meaning that this is about 24% below normal, and then our supply sitting at 83.7, which is about 17% below normal. Our supply is outpacing our demand in this situation, which is why we're at 91.3. Anything below 90 is considered a buyer's market. According to the Cromford Market Index, between 90 to 110, we're in a balanced market. So right now we are technically in balance, but we are on the cusp of a buyer's market. And every city behaves a little bit differently. So we have some of these here at the bottom that are in a buyer's market, like Surprise, Maricopa, and Buckeye, even Queen Creek and Goodyear, all technically in a buyer's market, although Goodyear and Queen Creek have seen some movement in a direction towards a seller's market or more towards a balanced market over the last month. And although this chart is looking promising with a lot of green arrows, if we look at the overall change, the average change month over month for this, we're at 8.7%. Which is great, but last week we were at 10.4%. So we have seen a deceleration in the movement towards the seller's market when we combine the average change of all of these cities. And the Cromford report is saying that the market situation is looking less positive than last week. Twice as many cities have deteriorated for sellers over the last month. Avondale and Buckeye joining Maricopa and Surprise. There's 13 cities that have shown improvement over the past month, but most of that improvement happened in the last 2 weeks of December, and the January situation has been less favorable for sellers. So we're going to have to see how this continues. If we continue to see a lot of listings hitting the market, again, as a seller, you're getting more competition out there, which forces you to be more competitive on price. And if the number of listings slow down, things will probably be a little bit more balanced. Now, a lot of this also depends on buyer demand, which is very much impacted by mortgage rates. So depending on what happens with mortgage rates, we may see that buyer demand start to come back and eat up all of those active listings, or stay subdued and those listings will continue to pile up. So time will tell. Usually the spring is a really busy time, but we don't start to see a lot of that movement until February. So for now, this is where we stand. Agents, if you are watching this and you've been considering joining a team, send me an email. I have my email address below. We'd love to talk with you. The Desert Dreamers team is expanding this year and looking for some great agents. Thank you all for joining. I'll see you next Wednesday on the next market update.